I'm going to be covering a futures trade that we did um, overnight. It's a swing trade, and decided to close it um, just before the market opened on Friday. What's the date here? Friday the 19th of February. Okay, so I'm going to take you through one by one here because we traded MNQ and MES. So I'm going to bring out the MES trade first. Okay, big on the screen. Okay, perfect. Alrighty. So let's pull off these fibs because um, I want to share with you um, exactly what I did here. Okay, so I'm going to take these off. This was a trend line that I had. Let me see this trend line here. Let's go back. Yeah, so that was a trend line that I had drawn a day or two ago. Just watching the watching the price action. Okay, so there were actually two plays because the market had gone up. Um, went down and then it went up overnight, and then it went down again overnight and then back up. Okay, so the MNQ trade had gone further, much further than the the MES trade, and so I set a stop on that trade um, for break even. Okay, and it was break even, and then the overnight action took it down, and I think we got in pretty much at the bottom of that. I don't typically do that. I'm not that lucky, I would say, to get in right at the bottom, but I think we got in right at the bottom on the MNQ trade. But we'll go over that in a second. Okay, so the thing that I want to communicate here is that these are patterns, right, that appear, and I use the hourly chart because I swing trade. Okay, and I like taking, I don't like paying a lot of commissions. I like to get in one trade and just hold it and let it ride, for a good amount of points. And that way it's much easier for everyone to be able to take that trade, because usually futures traders are scalpers, and it's very hard to follow them. And so I figured let's do some swing trades, because these are just like stocks and the patterns are all the same. Okay, so this white line here was a IBL low, from a previous day, and I had broken through on Thursday night. So we got in the trade. Actually, it got in the trade around here. Okay, and then it went way down, went up to break even, and then back down again, and then finally we were able to get out uh, just near the high today. Okay, so when you look at this when I look at this chart here, what I notice is that we have, very easy to isolate, right? We had a low, and then we had a higher low here. Okay, and even a higher low here and a higher low here, where the market, kept stair stepping up, and then it went down, but it didn't, and it took out this low here just by a little bit, and then moved higher. Okay, so when I look at this, I see immediately an ABC pattern. You probably don't, because you're not, used to seeing the patterns and watching the screen all day long, right? But that's what I do. And so the when I looked over during the overnight, what I try to do is try to find a place, near the bottom, and I know the market's going to go back up, so I'm not worried about it, and I put a small position on. Okay, but in this case, when you see this kind of a pattern down here, it should tell you something, and it most of the time it's going to be that it's going to be an ABCD pattern. Okay, so let's draw this out, and I drew it out after the fact because obviously I was sleeping at night, and I just set the stops in. But when I noticed this morning the market was going up, I recognized the pattern, and then I drew the fibs. Okay, and that's actually what happened. And so let's put out the fib extensions here. And so I use a fib extension. You can, and I populated up here just because it's on every chart and it's very easy for me to use. But you can also get them down here. Okay, down in this section here. All right. So so you don't want to be, here's the low, right? The most current low. And so you go back from that, and you don't want to be down at the lowest low, because that creates too much of an angle here, too much of okay. So let's put it in here first, right? It creates too much of a low or high here in order for the market to reach, right? So in this case, the 125 level was up here, and it did ultimately hit the 100 level, but I think before the market opened, which was, let's see, before 9 o'clock, it was moving up here, and this is where it closed, around the 100 level. But where I actually drew the fibs was a little bit more conservative. Okay. And I actually drew it, if I can get this now. Okay. I actually drew it here. So you see where the market went down, right? So I go here, see, and you're expecting the market to move up higher if you go lower on this fib, right? So you want to put it in a place that's conservative, that it's gonna reach the target. Okay. And so when I drew that this morning, and here was the market. Let's see, let's move this over. So we didn't get a chance to see, right? So this was around 5 o'clock this morning. Okay. And so around 8 o'clock or 7:30 or 8 o'clock, 9 o'clock, around 8 o'clock, we had this drop here. And then I noticed that basically once I drew the fib, we had basically a completed pattern. Okay. And so I decided just close the trade. Let's close the trade. Let's get out, and then we'll figure it out later. Now, usually what happens is, that the market stops typically around the 100 level. And in a stronger market, it'll go up to the 125. You can see it just went short of the 125, almost made it. Okay. But I don't like to be greedy. If I have a nice profit already, and we had a very good profit, I decided to take the gain here. And I think it was around 8:30 or 9 o'clock. Yeah, around 8:30. And it kept going up a little bit. And then after that, we had this drop right at the open. Okay. And and typically you have a drop, you have a gap fill in the morning, that happens. And I didn't want to be in the trade during the regular session once we had it. And so that's why, for those reasons, I closed the trade. Okay. And it was a perfect trade. It was a perfect ABC pattern. So this is A, this is B, this is C, and then here at the extension is your D area. Okay. And that's where you want to take profit. Okay. All right. So let's go to the MNQ trade. Very, very similar. Let's see. I think I have this. Yeah. No. Okay. Okay. So here, I have a lot of lines here. So, okay. So the ABC pattern, very, very similar. Okay. But MNQ is more volatile. Okay. So you're going to see a lot of candles all over the place. It's just more of a volatile index. All right. So let's take this off again. Well, I don't have to take it off. This is again, when I looked at it this morning, I saw the same thing. Now I wasn't going to go, to this here. It was just too far. Okay. From A to C. So I used this candle right here. Okay. And technically, this is where you would use it, but this is way just too much. And it didn't even reach the 100 level here. So again, I was looking for a pattern here. And again, it reached the 100, and that's where we closed the trade here. Went up a little bit higher, and then it dropped at the market open. Okay, so that's how I looked at it. When I'm entering the trade, I'm looking for a bottom or a low, near the market, and some consolidation to see whether we have a bottom or not. And honestly, for me, it's not precise. It's not always precise, because I trade one micro. I put on 1 micro, and then if the market goes against me, I may add additional micro to kind of cost average down. Okay, it's a little dangerous to do that, but I don't have a problem doing it in market conditions that we have today, and just because we're in a very bullish scenario, and it allows me actually to make more money if you add, if the market drops and I add another position, and you actually get a better return. Okay, so here again, this is the A area, B area, C, and D is between 100 and 125. This one didn't make it to the 125. I expect it to eventually, but again, it's better to close it before the market opens. Okay. Any questions? At what candle did I enter? On the MNQ, we stopped out because we had a position there for break even, and I'll tell you exactly where we entered back in. Hold on one second. Let me look at my notes here. So last night stopped out on MNQ and looking to go back in. Long at MNQ at 135.59. We went long. So 135.59 is right here. Like I said, right here, which is basically the low. And again, this does not happen often to me, so don't think I'm a super whiz at this thing. But I just happened to catch a low, and if I didn't catch a low, it's okay. Eventually the market was going to come back. I knew that. And that's just the conditions we're in. So it doesn't have to be extremely mechanical. You just understand the market, the market conditions, and generally nowadays it's just going to continue going up. We have these short, small pullbacks, and you have to just take advantage of them. Okay. Any other questions? All right. Thanks, guys. Hope this really helps. And if you have any suggestions or feedback, any way that we can help you guys better to become better traders, let me know. Thanks, guys.